Process of finding setups. What we ideally want to see is entry in certain zones. And so zones, you want to be pulling them from proper structure. That is the first step, is finding the structure. That's kind of everything. So understanding trailing your highs and lows, just start with that. There's a couple things you got to understand. You got to understand a valid break of structure and what a valid pullback is. What we consider that, at least. So a valid break of structure obviously is something like this. Let's just say this is a high that we're looking for. This is a valid high. We need a body closure above it. Body closure. We didn't get it there on that candle. Actually, the high is right below it. This candle, body closure. So a valid break of structure. A valid pullback is also what you want your high to be from to consider it a valid break of structure. So it was a little bit confusing here because we had this run down. This is a pretty good scenario, right? This candle closed here. So this is the highest or the lowest closing bearish candle. So we need to close above that high to consider a valid pullback. So we got a valid pullback here when this candle closed above it. Valid pullback. Now for this valid pullback to turn into a high that we would want to close above to a flip, we would need to break a structure lower. We would need to break lower. And so this low, did we break lower? No. So when we closed above here, it's a fake flip. It's not a bullish flip, hence why we just kept going lower. So because we broke lower here, how you trail your low is this actually gets pushed up. This would be the high because it's the highest point in between two valid break of structures. So here's our high, here's our high. When we broke below, when this candle broke below here, we take the highest point between the two breaks, which is here. So we had a valid pullback, valid break of structure. So now we can say that this is validated structure. So when we closed above this point, we know that that's a flip. So we closed above it and then we look for the pullback into the area. Ideally, our area is really just a whole zone, and we want to pull back into the 50% of the zone right here. So, we didn't get it here, unfortunately. I was waiting. Came real close, but didn't get it there. Now, the second kind of thing that you want to make sure you have is your SNDR. Is your SND responsible for breaking this high, breaking your validated structure? So there's literally a few different levels that you could look at SNDR because price is fractal. You could kind of drill it in and be like, oh, if it's a 1 minute high, you could have your 1 minute SNDR, or you could refine it and have a 5-second SNDR also. And so let me pull up an image real quick. We got last up closing candle before a break. So let's say this blue line is what we were looking to break lower. Okay, and so right here is just a little up wick. It's just a little wick. It's not an up closing candle. So the last up wick, that's like a 5-second, more so a 5-second SNDR zone. But then the next fractal, the last close up with the candle, like an up closing candle right here, last up closing candle, we can mark out that red zone. And then this yellow zone is last series, right? Because what is this flip in the grand scheme of things? Look how much time has passed. This is like a 12-minute or even higher zone. So what would the last up closing candle be on a 12-minute? It would be this yellow zone, right? And so look, it tapped the 30% of the yellow zone and it dropped here. This market actually dropped way lower, like 100 plus points. But if you look here, all of these little zones had a reaction, right? Broke, first tap of the green one, little scalp. Tapping 50%, scalp. right? It tapped all the levels, but each level just gives you an appropriate reaction. I mean, it just so happened here that this little one just gave us a bigger scalp than the orange zone scalp, but you know, bigger zone, bigger kind of reaction that you can expect out of it. Hence why this last series of up closing was the real tap. And you could even refine it more and be like, what's the SNDR within the last series of the 12-minute? So if this was just the 1-minute candle up, go into the 1-minute, this is the 1-minute chart, and then take that SNDR for that SNDR, and that's this. And then look where we tapped, literally the very top of this, like perfectly. I had this drawn out when I did trade this live, but I removed all the drawings obviously just to make this image. So price is all fractal, right? Higher time frame picture, last series up could literally just look the like last up candle on a higher time frame, or a lower time frame. This last wick up, if we go on a lower time frame, this last wick up is going to be a series or even last candle up. So it, you know, it's all fractal that you're gonna have to determine that. And to go into more in depth with SNDR is you want to have SNDR that not only broke lows but also that broke previous SNDR. Actually, let me pull that image up again. So not only is these SNDRs for breaking this low, we want SNDR that broke previous SNDR. So we can have, let's say this high, validated high, closing below the low, this low right here, right? So this is the highest closing candle. I'll just explain this one a bit. Did we close higher here? No, no. So these two lows aren't the lows we're looking to close below. We want to close below that one for the validated pullback. Validated pullback. So this is a validated high. So when we closed above it here, we did with this, the last wick down, last candle down, right? We got some SNDRs here. And when we broke below them, bam, we broke below these SNDR zones here actually. Like this down closing candle, we'll use that last down closing candle because that's a 1-minute high. We closed below it with this candle. And then so the previous candle up from that is this. So this is SNDR that actually broke previous SNDR down here. So this is SNDR that broke lows and previous SNDR that sent us higher here on this validated structure. So this little zone right here is the single strongest zone in this entire chart. Hence why it gave us literally the best reaction. So that's pretty nice. And then going into what you do is you really just look for the same things on a lower time frame. You just break it down. So you got your structure that you kind of follow on 12-minute and 1-minute, and you understand that. And then when you have your zones, your SNDR zone that broke SNDR and a high, like for example, again, we broke these lows. We kind of had this SNDR from breaking this low. Right? When we broke higher, it created this SNDR. So this is SNDR that broke SNDR and this pullback high. So that's a pretty nice zone. We just didn't happen to get a pullback into it and a tap higher. It just went higher due to bouncing off some higher time frame POI over there. Price is just going yeet. What am I missing out? Nah, it's all good. And so what we look for is those validated structure, validated zones. So right here, here's like a validated zone. So when we dive into there, you know, there's different confirmations that some people look for. Like we take the same thing with a validated pullback. So this candle, lows closing, down closing candle, we closed above it, tapped back into the area and gone. So when you see the tap into the area and then a 5-second bullish candle out, right there could be your entry right there. Right, that's what some of the guys do, just on a nice 5-second bullish candle in a good location. I mean, that entry would have had zero drawdown pushed out. Right? You could draw a little zone from this area, wait for it to tap the 50%. So this is more so like a candlestick structure flip. You wait for your 1-minute zone and then go down in a candlestick structure. You can do it on the 1-minute, 5-second. You know, the lower you go, the more aggressive it is, and the earlier you'll be able to get entries. You got to find for yourself what win rate you kind of want. If you want to have a higher win rate, because you need that mentality stability, then it's better to kind of go for the safer entries, obviously. But if you get FOMO a lot by not by like if you're less patient, you might want to have a slightly more aggressive model so that you actually take more trades, and then it's not going to cause you to FOMO to cause mistakes. So literally everyone's different, and how you manage the system according to your psychology is more important than just what I could tell you the data is for the setup. You know, I could tell you, oh yeah, the data says that a 5-second high from a validated pullback, when that gets broken, it taps 50%. The data says that's the best, but that's for me, and that's for mechanical, you know? So how you actually manage trades personally, obviously you got to find that for yourself through back testing. That's where people have to put the work in. And so when you get your zones, like for me, what I do, I can tell you what I do. Like if you don't want to wait for 1 minute candlestick structure flip or validated pullback on the 1 minute also to be even safer, right? So we could have our zone here, tap our zone, and then go into that 5-second. Let's go there. Right here. Again, this entry. So what I do on the Renko is I just wait for that flip pattern on a Renko with reversal bar to reversal bar. So here is our, right, we got to push down, reversal bar it up, and then reversal bar down below it. And then so we flipped, tapped into the area, and then got the reversal bar up. So that's what I do for my entry, is right on that reversal bar. Right, so where are we at here again? Recapping this trade, we're at SNDR. We could also consider that SNDR that broke this higher SNDR, because this is the SNDR that broke when we closed below here. When we closed below this, that's that SNDR. And so when we broke above it here, what did we create? SNDR, that broke SNDR, right? So not only is this SNDR that broke this validated high, it broke that SNDR. So that's gives us the one that we want. And then ideally we have the swing zone also with a level lining up, a 30, 50, 70. A lot of time it is going to be 30. That's when you use a 30, is when it lines up with SNDR instead of just waiting for the 50%. 50% never came. I mean, heck, the 30 even never came. I was waiting for the 50 of this zone. I was waiting for one more tick, one or two more ticks lower. Didn't happen. Oh, we are getting a big move out. I mean, obviously there's little things we look for, like little traps here. Like if we have a low here, we wick below it, came back closing in, close above here, right? We closed above here. What did we do? Tap into the area we left behind and go higher. It's the same thing over and over and over. Break, tap into the area higher, right? It's the same thing with continuations. We have this area, right? Broke higher, tapped into it. Man, we even tapped the little micro SND along with the swing zone. So it's just over and over and over. And then we expect a high. And then the ones to the right are for continuation. So if you get these little zones on the right, those are more for continuations. You want reversals, zones to the left. And you want to take the high. So this would be a nice high. Like, look to take it, trade back in. So this is looking pretty nice. Now it's just up to you to determine how safe you want to be. Do you want to wait for that valid pullback on the 5-second? We didn't get the close, right? If we were trailing it, okay, we took the level here. Did we close below there? No. We went higher. Okay, now we got the close below. Tapped into that area perfectly. See, now's the entry with that wick out, wick above. Took that one, the one before. Just so happened that we're getting a... I wouldn't have got in because it didn't follow my Renko. It didn't break the reversal bar that I would have wanted to break. So personally, I want to see it break the 5-second validated pullback with my Renko. That's what I do. So we're at our validated proper zone, not just some random zone or something that's only on the 5-second. Like we want a 1 minute. We want like a 1 minute higher low break in and then take an SNDR from there from at least 1 minute structure. We're not just trading just from the 5-second. Got to be clear with that, because you don't want to get caught up with that. You really want to try to understand what the 1 minute and higher time frame is doing and follow that, and just use the 5-second to get more refined entries. We're not exactly trading 5-second structure. Like, sure, we're trading 5-second order flow for the entries and everything, but that's not where you should be pulling your main zones and your main areas where you're like looking on the macro scale of where we can go short, where you can go long from. So now we got the break of this low, right? Validated pullback because it closed it. We got a couple SNDRs. This is the SNDR. This is a little bit bigger one. I'll just keep that top one. I haven't got a tap into it. It's going to be a validated pullback on the 1 minute. So if it taps into this area, that would be looking pretty nice, right? We're in our validated structure, right? Validated pullback, validated break of structure. So this could be a continuation. It's a continuation 1 minute zone. I mean, it's even a valid zone on the 12 minute, right? Valid pullback, valid break of structure on the 12 minute even. 12 minutes wicking out, wicking back in. 12 minutes looking good, 1 minute's looking good. We're at the level. We're seeing what we want to see. It's at our level. It's consolidating a bit, giving wick out, wick back in, right? Giving the valid pullbacks on the 5-second. I'm gonna draw a swing zone. Now, personally, what I'd like to see is my little Renko flip here after we tap. Ideally, we would tap the 50% of the 5-second. So it'd be a little higher than that, but it's a little low. Like, it's making our pattern. It's making the SNDR. This is also what I want. I want my SNDR for the Renko flip. So this is that low on the Renko I wanted broken, tapped into that area. Ideally, I would have got a short out of here. Like this Renko bar, reversal bar, sure, any bar, as long as it doesn't break the high, you could enter. But ideally, it holds the zone nicely. And even more ideally, you have like an attempt to short out of the area, right? It taps your SND. Ideally, you have an attempt to short. That gets ran. And then you have a second attempt to short. And that second one is what is more ideal. So like it would be that, and you take the second reversal bar, top of zone. That's like my perfect entry is what I would want. Ideally, this would be obviously at a higher area though. I'm just saying for just flip wise, but ideally we would have that up here now, which is what we're getting. But we're breaking highs. We're breaking highs without breaking the lows that we want. It might wick out, wick back in for a double top narrative. If not, then it's going to close above, right? And we can expect it to come back into this area for continuation long. So that's generally what we do. Is there's kind of three main ways to play. I'll bring up those diagrams now. So now you kind of understand structure and whatnot. There's a little bit different criteria on like how you can trade. So we got obviously our flip pattern. So you have a flip trade. You've got your continuation. So continuation is just you have a simple valid pullback, valid break of structure, and then it's a zone you could look to continue down. Bullish continuation, same thing. And then the kind of third thing is kind of it's like a pullback. I kind of anticipating the pullback to the area, because we have a little bit of a narrative that when we break out, let's say this is the high that we break out of, we can expect that price returns to the area that we just broke out of. That's just how it moves, right? We break out of this low, move back into the area. break out of this high, move back into the area, break out of this high, move back into the area it came from. So it's the same thing. So here, like, ignore this flip right here. We got a flip up, but no pullback. Well, we got the pullback here, but no pullback back into this continuation. And so we're expecting that this area is gonna act as a magnet because of that narrative. We broke higher, expect to move back into here. So it's a narrative that we're gonna go lower here, plus we're hitting a POI or some flip or something over here, some SNDR, that's gonna help us short. So you can literally buy here, right? Because we got a flip, buy here, we're at this area, short back to here, buy back to here. You can literally do ping pong bang like that. And that's how you can trade ranges and with good, it's the same thing that we're trading with ranges and with structure, because this could be a big range, right? Here's a high of a range, here's a low of a range, and we just go ping pong like that. Or this could be a nice trend, right? It could be a normal nice trend, and it's just a reaction to a continuation. Like in a bigger scheme, let's say this would be like a 50% of a bigger zone, right? So this could be just a little consolidation, like pretend like this right here is just this little area right here. So we're actually in a higher continuation zone like this, right? We're tapping off of a higher continuation zone, and it's just got a little micro. This could be like a 5. Like pretend this is a 1-minute chart. This could be what the 5-second looks like within here, right? So we get the short up here, potentially as a flip up here. First short down, taps our higher time frame POI, flip up, right? And then maybe it would short back down for a double bottom, continuation higher. So it's like all that ping pong. It's the same pattern we do, continuation trending. The only difference really with continuations is that you got to be more willing to kind of understand location, right? We're not going to be coming way back down to this low in a trend. You can expect with the trend that we have like a channel just to visualize it, and we've got higher lows, higher highs, right? And so what is high? What is a high location? A big thing we have to take into account is location of a trade. Buy low, sell high, right? So with buying low, selling high, you have two different scenarios. You've got your range scenario. There's two different algos in the market. You got your range. Okay, I need to change that to just a range. You got your range algo and you got your trending algo. So for a range algo, buying low, selling high is right at the extremes like that, right? You want to be near the top and the bottom. But bottom of range in a trend is different because this is the range. It's like a channel up. So buying low in a trend profile continuation is like buying right here, right? It's like buying the middle of the zone, not the bottom of kind of that previous. You can see the difference. So the difference is you would, in a trend profile, you'd be buying here, but you could be expecting maybe price to come down to this low, and it doesn't. It just bounces at the middle, goes higher. So you're always like, oh, I'm trying to buy low, but it's not going low, and it just keeps going higher. And it's you got to understand that this is low. Look at this line. Look at this line right here. Right? It is low. 50% of the previous area is low. That's like a big key that people got to understand, is just understanding the buying low, selling high, and understanding which profile they're in. And that's where market structure and understanding how clean, you know, are we getting valid breakouts or is it failing, right? So the main thing right here is we got a low. It's not really a valid low, but let's just say we got a low, a high, and then we are approaching this low. When this low fails to close below, that makes this a weak low, or a weak high, I mean. So we can, with a weak high, obviously that means that this can expect to be broken. It's not going to hold, which is exactly what happened. And so this is like a nice, right? It's the continuation profile. Let's keep going. But if price was to reverse here, now, because it failed to close, let's say right here, it failed to close below and it came back down here, it failed to close below. So what do we have? If it fails to close below, that makes this a weak low. And so if we have a weak low and a weak high, that's a range profile. And that's when you have to understand you're in the ranges, when you got a weak low and a weak high. So understanding protected highs, protected lows, weak highs, weak lows, those are the main things to follow along with the SNDR that broke SNDR, right? There's a few things that you want to always be following, all finding that mind flow. And right, again here, we got no tap into our area that we wanted, but it did tap the area, it just didn't give us the deeper one that we wanted. And it didn't give me the tap idea. We got an aggressive entry that would have played out. But we didn't tap a reversal bar SNDR, which is what I would wanted. So like it's just really piecing together the market structure and the zones along with narrative and where are we, our location. Like narrative is like what is the draw? So when we fail to close below here, that makes our draw and liquidity higher, right? The narrative says that we could expect a break here. And then so it's the weak high, weak low, double bottom narrative along with the tap, right? First tap, scalp, second tap, double bottom usually breaks the first pullback low, right? So there's a few narrative things there that we combine along with just the understanding of how zones move. When we break an area, we expect to move back into that area, right? So just following the zone narrative along with market structure narrative. And then combining that with proper locations, understanding what I talked to you guys about with the example with the channel, buying low, selling low in a channel. So if I drew out a channel here, for example, let's draw a sharp row because that one kind of got broken. Right, what would low be in this channel? I mean, it's not a great channel, but low would be like here. So even though you'd be like, oh, it's so high in the, like, I want it to come back down, right? We're going to make a micro range right here. I want it to come all the way back down to the low because, you know, we got to buy low. So we got to buy the lows. You know, in a trend, buying low doesn't mean buying the lows, right? It means pretty much buying SNDR. Unfortunately, we didn't tap that clean 5. Let's see. When we broke this, we just had a little, right? Sometimes it'll tap just the tiny wick on the 5-second. That's what we got here. It didn't even tap the last down close candle on the 5-second, right? But again, this SNDR, was it the last SNDR that broke this SNDR that sent it down? Well, it kind of was. It was the last move down. So that adds more strength to this, right? Because you can see that it was something that broke a high, broke an SNDR here. So that, you know, that's the ones that you trust, right? This one here, I mean, sure, it's the last down close candle that broke this one, yeah. But we got no tap. So what do? We got to observe here. Are we getting what we want to see here in our area? If we get what we want to see here, take the trade, but just know that it may run less. It may not give you a brand new high. It may only give you 5 points. Whereas if you get the cleaner entry, the lower entry, obviously if you're targeting this high, you've got more points to go from this entry to the high than this entry to the high. So just know where you're at and which target you got to do. That's the main thing. I heard Dave say it's not, you know, entries aren't exactly wrong, targets are wrong. I can't remember exactly what he said, but it was along those lines. It's like when you see these zones and these entries and what it's showing you, you take the trade. It's just a matter of how much you target. Understanding also the more like zones, higher time frame zones, clean structure zones, the more it all lines up, the better location you're at, the more you can target. And it's just you got to get to the point where you're just flowing. Your mind is flowing with knowing where you're at with like how strong a zone could be, right? You'll get to the point where in seconds you could be like, yep, that's SNDR that broke SNDR, broke highs, it's validated structure, all of that. Oh, we go in the 5-second, we got the break, tap into SNDR, bang. Like that's basically, you know, basically what we're looking for. And also valid pullback. That's one thing, is counting your pullbacks. Not just trailing your highs and lows, trailing your weak highs and lows, trailing your SNDR flow. It's also counting pullbacks. So what do we got here? We got a breakout. Did we get a valid pullback here? No, we didn't close below here. Did we close below here? No. Did we close below here? No. So we didn't even get any valid pullbacks here. We got one valid pullback here because we closed below. Well, we didn't actually. So when it's not doing these valid pullbacks like this, that's also another thing that lets you know that, it's still still really bullish because it's no valid pullbacks over and over and over. And so when you see the valid pullbacks failing, that's another thing that lets you know you're in a trending profile and take those continuations, take the continuation entries and know, remember what is low? Use the trend lines, honestly. Use trend lines that line up with SNDR. I saw Dave drawing trend lines, and I didn't know exactly how he used them, but I heard him say use them when they line up with SNDR. So if we did get that bounce, this SNDR here, right here, might have been a good long. It came just a bit later from this SNDR. Third touch of a trend line. I actually really like that for a continuation, right? Broke the high, tapped into the top of the area that we broke with the Renko, came higher. So it's a little candlestick flip. So although there is discretion, discretion with understanding targets is the main thing. I don't think your entries are, you can get it to the point where entries are completely mechanical. Like valid structure, valid zones, all of that you can code. So if you can code it all, then it's all mechanical, right? The discretion is really where you place your stop losses and where you do your targets. Although you can have that a complete non-discretion approach of just doing a set 5 risk, 5 reward, or whatever you want to do. I honestly kind of like with what I've designed for me and the high, this is the Renko low that I want to get high, or I want to get broken. What the heck? That's the Renko low I want to get broken, right? We broke it, tapped in an SNDR, and you got your reversal bar, so you're in there, right? But, we're so bullish right here. Are we at the POI we want? You can see these working like this, and then you're going to want to just take every single one. But you got to understand, are we at our zone? Do we have enough reason? Look, we took this higher time frame high, closed back in, right? So we took a high. We took a high. That is another thing that is very important that I haven't exactly talked about yet is, well, actually I've talked about it a bit, but looking to take something and it acts as like a trap because it's kind of a bit of a narrative. We take it when something is taken or is broken, you can expect to move back into the area. So that adds bearish narrative to this little mechanical flip, right? And another high that I really like is not just extreme highs and lows, but when you have like a clean move and you've got your SNDR. So right here, right, let's just say this SNDR, if you get a wick below back in of SNDR and a candle to the left, that is oh my god, that is the best thing you can look for in terms of like things to be taken for continuations. It's just really dang nice. Is looking for highs and lows of SNDR to be taken and then traded back into and not closed below. That's really juicy because I noticed a lot of time your SNDR, sure, it'll tap just the top of your SNDR. It does depend a little bit on like how it looks and location and everything, but because right here, the top of this SNDR was pretty much almost the 50, like it tapped the 50% of that little flip. So with ideally what I want to look for, I mean, it's like I said earlier, you get your second entry long in the top of your SNDR. So it just tapped the top, but you got to understand that we already tapped the 50% of the swing. So that is a pretty good location wise. We don't like there's a different times for when you want your SNDR to get mitigated deeper, right? Than just a tap of the top. Sometimes you want it to go to 50 or all the way. depending on your location, how much you can target for opposing SNDR. If you take the top to here, 11.5 points. If you take the bottom, you've got 15 points. So let's say your SL to down here, 16 points there to go for 13, that's a negative RR. That doesn't work. Whereas if your entry at bottom of SNDR, 14-point SL and 15-point gain, so that's a 1-to-1, so that works, right? So it's understanding that you want to make sure your target to SL is always a 1-to-1. You don't want a negative risk-reward ratio with your trades. Like, you just don't. I don't know. I'd say that's a pretty dang good explanation so far. I mean, what am I missing? I guess just understanding a little bit more on like how much to wait up here. Like we got our first little flip, but then sometimes your pullback leg right here, like this leg here, we broke this low. This is our pullback leg. When we get first tap scalp that breaks the new lows, this pullback leg sometimes could be SNDR itself. Because what do we get? New break, new SNDR. So now your pullback leg that you entered off of itself could be SNDR for a continuation right there. Bang, that's another thing to note. And then so it's the same thing over and over and over. Tap, same thing. This can literally turn into SNDR for breaking lows. So that's what you want to do with the continuations with the flips, is when you get your flip, keep looking for lows to be broken and then the SR tap. Lows broken, tapped into SNDR. More lows broken here. Right, we got our SNDR, or even there's a little, you can see there's a little wick here. So just tap the very top. First tap scalp, double top here would be a nice narrative for a continuation. But then you got to also count your swings when you're doing your pullbacks, because what do we know? Usually price will go 4 to 6 swings and then reverse a lot of the time. 4 to 6 swings. The seventh will reverse. I mean, you generally want to be taking your continuations up to fourth swing. When it's 4 swings or more, you don't want to take it. So we had our first break, pullback, 1 swing, 2 swings, 3 swings, 4 swings. So now, this might be the last one you want to take. You don't want to keep shorting here, but it's also, you don't want to just take that valid pullback counting as your only thing understanding on, has this projected enough? Is this how far this is going to go during this pullback, right? And we got to look on the higher time frame, it's the same thing. Where's our zones to the left? Where's our stuff that we can use to predict where this is going to pull back to? And I'm not even getting to Feigenbaum principles with Tristan, but that is definitely one tool that I would like to recommend people to look at. Yeah, I'll leave it up. I haven't looked at chat. I've just been explaining things because I wanted to make that snippet of video. That's pretty much it, guys. I mean, location, narrative. You got to map out your structure, right? What do we do? Let's just do a quick top down when we come to the charts. You map out your structure. So draw your highs and lows. Draw your valid highs and lows. We had a valid low here, valid high here. Oh, we broke it. Where's our validated pullbacks? Nope, we didn't break below. Nope, nope, nope. Again, I was saying there weren't any here. Nothing here. There's literally not even, actually there was, nope, not even one there. First one right here. This is literally our first pullback. Breaking below this low. What did we get? It's actually kind of nice, right? Broke the low here, came, tapped that area. With the candlestick structure, first the candlestick broke, tapped 50, but then you got the close, tapped the area again. So there's 2 nice taps there you could have got for shorts. And that lines up, right? So that 1 minute narrative that I just saw with the 1 minute candlestick structure, it lines up with that Renko stuff that I was talking about, just looking at these entries on the Renko or on the 5-second. It's right, it's pretty nice seeing how that stuff works in a fractal nature. And if you don't have 5-second or this chart, just use the 1 minute and use a higher time frame than 12-minute and use candlestick structure, right? Use your 12-minute along with narrative. Look for the failure lows, right? Sometimes you might close a zone, close above SNDR, and you think it's violated. But if you go on the 12-minute, if you can see it on the 12-minute, it might have just been a wick out, wick below. Like right here. Is that not showing? I think that's 1025. I don't know why it's not showing. My drawings are not working right. Oh, I don't think that's not a drawing I usually use. That's why. So here, right, this candle just wicked this blue zone and came back in. Oh, it didn't close, but a lot of time it would have closed on the 1 minute, and then you might think that this here, is still is it's basically just understanding what time frame the zone is and knowing that you need a close of that zone or of the low on that time frame. So if this low here is a 12-minute low, which it clearly is, even though it's our protected low on the 1 minute right now, for it to really be a change in market structure shift, it would need to be a 12-minute close right here because it's a valid 1 minute low or a 12-minute low, right? So you got to keep going up and you got to see how much time has passed, right? Usually the distance in between the time it's passed makes how valid this high is. So from this low and this high, and then it came and broke the new low, how much time has passed? I mean, 2.5 hours. So this, that means these are very higher time frame. Basically, we would need an hourly close above or below this level for it to be a real break, right? Because it's such a higher time frame that, if we go into hourly, let's see what those looks like, right? I guess you don't see the low here, but you see that that is a high. It is an hourly high. So for that to be a true market structure break, it's just following market structure and the strength of it all, right? If we close here on the 1 hour, obviously that's going to be stronger than if it's just a 12-minute or just a 1 minute. And what do they do? Is that going to make it so you don't have an entry? Not exactly. It's just going to change how much you target and how much you're expecting, how many highs you're expecting to get broken, how much you're expecting it to run and go. And again, narrative combined with the zones and what's in the way, location, it's all combined. It's all a thing that just kind of flows, and you got to create a rule base because of all these moving parts. It can confuse you with obviously like, oh, well, what do I do? Do I do it when it's this pullback, when it's that pullback? Do I take this? Do I take the first pullback after SNDR flip on, it's something that you got to back test, find what you want, right? You can back test what I do, you can back test what Dave does, but it's never going to be as good as if you or sorry, not you can backtest what Dave. Well, you can. You can try to model what we do. You can try to do what we do, but it's never going to be as good as if you find what works best for you, right? It's simply just the fact that, like I was explaining earlier, we're not trading DTFX strategy. You're trading a strategy of you. How I execute and trade is completely different than someone else, even if they have the exact same entries or exact same rules, right? It's and trade management and all, just how long someone can hold being drawdown, and then combine that with literally not wanting to hold trades because they have a trailing drawdown. How people are going to manage trades depends on the type of account and potentially leverage and margin, and it's just people asking how much you risk, how much that. It's like I kind of get it. People are, oh, how much do I risk? Right? I think so. Who just asked me that? I'm not reading the chat really much, but you asked me how much I risk. I risk right now, I mean, 1% of my trailing drawdown, right? That's what I'm going to say. I'm not going to give you a dollar figure. I'm not going to give you anything else. I'm an arbitrary amount on the available drawdown I have is what I've chosen, 1% about, give or take. So with 2 micro, right? 3.5 point stop loss. I do move it a bit, so that's the thing. But I have my ATM set at 3. Sometimes it'll go lower to 1.5, even 1. Sometimes it'll go max to 5. Generally, it's like 1.5 to 5 is the range. I'll never go higher than a 5 point stop loss. I mean, if there's like a high right there, I might go 1 or 2 ticks, but literally 1 or 2 ticks max is the give or take I give. But I still don't even do like that's doesn't even happen that much. But I go based off what structure is telling me and what it's, not just of what I think. And having a set 1-to-1 or set 5-to-5, it's never going to make as much money as if you have a approach where you take all the factors into account and you understand, where price is likely to deliver to, right? It's all it is. It's all just understanding where price is delivering to. The market does two things. Okay, the market is rebalancing itself, or it's drawing liquidity. It's going towards some liquidity, right? So where can we expect it to go to, and where can we expect it to come back to? Those are two questions always, you always want to be thinking, and the structure, the zones, all of that's going to tell you all that. And like, I don't care how someone enters 5 second, Renko, whatever, that matters so much less compared to actually following proper market structure on the 1 minute, 12 minute, understanding narrative and the draw. You know, you can you can enter blind almostly if you're good at being able to read the market properly. That's the important thing. It's not just seeing a little pattern and just seeing a pattern, and we're not pattern traders. We're not trading just because we see a little flip pattern, right? It's understanding narrative, and it's understanding that, oh, we broke out of an area, so we're expecting to move back into an area. And on the grander scheme of things, oh, we're making a double top. So if we make a double top failing to break above, then we can expect the draw lower. Oh, and in a bigger scheme, we're making a bigger double top. So we can expect the draw to be even lower. So that gives you even more confidence to hold even longer. And like I said, it's just, you're just flowing constantly with understanding the strength of where price is, going to move to, and the strength of where price is going to come back to. And delivery also. When you're in a trade, where is price delivering from? One thing that I really want to note is you never want to short against a double bottom, right? So this double top here, let's say this high here was a bit cleanly, but this is, we got a double top here. You could say maybe on 12 minute. 12 minute looks a bit better. Top came down, pushed back up. So double top narrative. But someone could be like, oh, we've got some, let's look at it on a lower time frame. We're at some SNDR right here, right? I wanna long some SNDR. I mean, it could work out, but you can get to the point where you're going against the double top narrative, right? Double top, what do we expect? We expect the lows to get ran from a double top. Double top runs lows. Not only runs the low from one top, it runs both lows. So that could be that one, or it could even be the low way down here, right? And so we never want to long until at least the first low is broken. It's got to complete that narrative. So you want certain narratives to complete, take out the opposite side. Complete your narrative, take out the liquidity, right? Trap some toilet paper people. Who are toilet paper people? These people right here. All these people selling, 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 selling. And what does the market do? Right? The market comes back up. All these people who are selling, targeting these lows down here, they get taken out. And then what does it do? It rebalances to the area, to the 50%, and then we get our flip here to bring it short. Right? That's kind of the thing that we would expect, right? with the double top narrative. We want to follow the double top narrative, not go against it here. So making sure you don't go against narratives and knowing where delivery is. Like, let's say this right here was a crazy strong confluence area, which it actually was. Like we had three tops here, SNDR, 30% of this bigger swing zone on the literally 12-minute. Like we failing here. Sure, it's got multiple mitigations, but maybe it was, let's say this top wasn't here, then it would be stronger, honestly. But we're at a higher time frame POI, double top, right? That narrative is pretty strong, so we can expect that this push here from this second entry, or the double top, the second top of the double top is really where you want to be taking the shorts. So we close below here, right? Here is our pullback candle that we closed below, tapped into SNDR. What did we do after we tapped that SNDR? After we created a double top, after we created all this POI, we went goddamn yeet. I'm not a trainer and I'm explaining trades. You gotta better be thanking me because I'm missing out money. Not. I should have made this video after hours, but no, my friends gotta ask me. No, friends gotta ask me to make the video. No, I should have made it on the weekend. It's my fault. My fault. But you know what's good with the system? There's no FOMO because you know you get a trade every freaking couple minutes. Every few minutes you can get a trade. Right? So someone might pull a zone here and be like, oh yeah, we have a valid swing zone. But is it really valid? There's no valid pullback here. Actually, it did. Oh, but that's not the valid bullish candle that we're looking for. It's this one. Oh, but this one closed above it actually. Okay, so yeah, that one is a valid pullback. Right? So if we're just following here, follow it candle by candle. Okay, now we need to close above here. We didn't get it here, so it's still, if we're looking for that pullback candle, we're still, man, why did my drawing tool change to this? NinjaTrader, what? My keybind literally just changed. It used to be this, and now it's, what the heck? Okay, now it's back, apparently. Weird. All right. Oh my god, now we lost it. Okay. So we were looking for a break of this or a break of this to really change what we were looking for. So we broke higher here. Okay, so now we can have this as a low that we would to break for a valid pullback. Broke it. So now we got a valid pullback. So now we can count that as a valid pullback and that this low is a valid low because valid pullback, valid low, and then when we close above it here, that makes it protected. So actually, I can drag my protected low up to there, right? So here, we got a valid pullback when we close below this low right here, right? So this is the candle, the highest bullish candle that broke out, pulled back, closed below it, but we didn't get another break of here. So if this candle came up, closed above here, then our protected low could have got trailed up to there, right? But we didn't, so the flip hasn't happened. It's still here. And then understanding first flip is fake is a whole nother narrative. Usually your first flip is fake. And then combine that with pullbacks. First flip is fake when we've only had 1, 2 pullbacks. Gives you even more reason that we're not done. We're not done yet. We're not done yet going up higher. We're still going for this mitigation, right? The draw on liquidity, what do we know a lot with equal highs is a lot of time you get near a higher time frame high, usually will trade away from it before it gets broken near a higher time frame highs. It'll trade away from your higher time frame high and then it will break it. And it's failed to do that a couple times now. Here it's failed, here it's failed. So when this, there's a lot of liquidity up here, right? So when this candle breaks here, it's probably going to want to run pretty decent. I mean, obviously we can expect a pullback into the area, but there's a lot of liquidity there. And it's understanding that narrative. We got the zone there. right? Let's look for it to be within 4 pullbacks when it's up here. 1 pullback, 2 pullback. Let's get a break of structure. Another pullback. So within 4 to 6 swings of a pullback is when you look for the flip. Understanding that first flip is usually fake. Comparing all that with your narrative of your highs and lows and where your draw and where liquidity is. Drilling it down on the 5-second or lower, or not low. Well, yeah, it could be lower. It could be 1 second, and getting your entry refined from there. This is the algorithm, man. I don't know. It's pretty dang good. And ideally, in terms of like just looking at lows to be taken, a lot of time you want a low to the left, a far low to be taken, and a low within the previous couple candles. So you can see here this wick down, took out the previous candle low, traded back in. That's nice. That's what we want to see. But ideally this wick out also took something to the left. It just so it didn't happen here. But it happened here, right? We took out this high to the left. So we took out a far high and we took out previous candle high, traded back in, valid pullback, tap into the area. That is really nice. That's exactly what we want to see for our trades. Wick out, wick back in, area. We're at our SNDR. We're at the zone. We're high, right? Location fits the bill. We're high in our range narrative. Top of range. Taking that on the 5-second or whatnot, high is pretty high on the range, right? If this is the swing that we made up, down. Right, looking for here, we had this little swing area. Looking for sells up here would have been good. High, we're high there. Well, that's it, guys. Pretty much.